Great. Well, I want to welcome co-CEOs Bill Kish and Jeff Shewfelt, as well as Gus Hartl from G&F Financial Group, to the Coastal Front studio this morning. Bill and Jeff have worked together in various capacities over the last 30 years and been co-CEOs for 9 of those years. Entering the financial industry in 1980, Gus has held leadership roles at both large and small credit unions. Together, these 3 gentlemen were at the forefront in guiding the merger of Aldergrove Credit Union and G&F Financial Group, both strong, long-standing cooperatives. On July 7th, 2021, Aldergrove Credit Union and G&F Financial Group announced their intention to merge into one unified credit union effective August 1st, 2021. Employees and members were consulted and invited to vote, with a majority agreeing to the merger of like-minded credit unions who have worked together for many years. Together, total assets under new administration will be $4 billion. Today, we'll be exploring the steps involved in a merger of this size and how credit unions stack up against the big banks. Gentlemen, thank you for making time to come on our show today.
Thanks for having us.
Great to be here.
Great. We'll start with the mergers, and actually it's a good fit because of the fact that you're not only just completed this merger, but Jeff, you just mentioned as of yesterday, the regulator granted approval for 2 more potential mergers.
Yeah, credit unions are facing a lot of challenges, and as the boards and senior management teams look at their strategy annually, they probably face the same questions and challenges that we did. So certainly there's increased competition. The business is getting more competitive. Rates are getting more competitive. There's new entrants, fintechs definitely entering the market. We're competing with banks all the time. So competition increases. Our members have greater expectations all the time. Apple announces something new at 11 and it's released at 8 a.m. and our members walk in wanting it the next day. So it's hard to keep up with those member expectations. Regulations are getting more difficult and greater on a complex business like we have. It's important to grow. It really is important to grow, not necessarily for growth's sake, but for the opportunity it creates for your credit union, for your members, for your community, your staff, and the credit union itself. And so Vancouver Police Credit Union and Mount Lehman Credit Union serve really passionate people in their communities, and they looked at the same challenges we have faced, and Aldergrove looked at last year. And so about the last 6 months, we've been working on what does it look like? Would it make sense to bring the credit unions together? There's actually a process we go through, and we had word yesterday that our regulator has given us consent to move forward. And now the most important part, which is, do the members want that to happen?
Right. Okay. Well, that's good. That's a good background, and actually a good segue into a question I have for you. So, in a merger of, say, 2 banks, for example, in a more traditional sense, especially if they were both publicly traded, you would have, or like in any industry with publicly traded companies, there's they're profit-driven entities with generally large shareholders that account for a large part of the overall vote. Unlike a credit union, where it doesn't matter how much money you have with a credit union, everybody gets one member, one vote. Have I got that right?
Yeah. That's exactly right.
So maybe Jeff or one of the others, could you comment on how a merger of 2 credit unions is quite different in its process, or are there different challenges, or is there more buy-in? Can you explain the difference between that and, say, the merger of what you would see between 2 banks?
Yeah, probably at the foundation of it, there's no exchange of value. Okay. You aren't looking to exchange this share for that share. Right. And so what are those shares worth, and what do you get in exchange for your share? As a cooperative, it's very different. I mean, you can only have so much money in shares, and you get 1 vote for that. So there's no concentration of ownership intentionally with co-ops. And then as you look to merge, what is important? We're governed. What's really different is we're governed by a board of directors who are members representing the membership. Yeah. So they represent the members and make a decision if it makes sense. You try to determine what's the name of the organization's what's it going to be, who's going to be in leadership roles. Those are kind of the critical things, and then you move about really an exchange of shares through the process and launching your new credit union.
Sure.
But of course, as I said, you need regulator consent, you need the membership to approve it, but probably more importantly, it is all about people. So it's your employees who are passionate and concerned about what it means to them. Sure. And the passion that credit union members have for the credit union that they own is actually hard to believe at times how passionate people are. And if you've been a member of a credit union for 50 years and it's part of your community, that decision to say, okay, we're going to take a step that may change the name and may change our credit union is very significant for people.
It seems almost more meaningful because when you look at two mergers of two corporations, public companies, it is largely money driven. The acquirer is looking to improve efficiencies or expand a new market, maybe like you're doing, and eliminate some redundancies, or as they call synergies, right? As the word often used. And the acquiree is, those shareholders are generally looking for a big lift. If they've got whatever the share price is at $10, they're looking for a 30% lift. That's a pretty good reason to say yes. But when there's no real financial motive here, it's got to be a lot more genuine, I imagine.
Yeah, I mean the journey we were on with Gus and team at Aldergrove, it was really just all about opportunity. That's what you're trying to create. Right. So, what's the opportunity to expand the products and services for your members? What's the opportunity for your staff? Can we have a greater impact in our communities than we had? And can we actually strengthen the credit union financially so it's in a better position?
It definitely is a unique type of transaction in here because it's based more on the emotion. The process that Jeff talked to earlier is more about trying to deal with those deal breakers up front. You've got a business case that makes sense. It's obvious it's going to make sense. So in most combinations, that's a good enough reason to proceed. Yeah. But here you're trying to anticipate where does the emotion of the members, is there a willingness to make it happen? Sure. Is it in the right interest of the staff? So you're absolutely right. It's more aligned with the employees, the membership, and what are the needs of those.
Okay, yeah. It's tough for people in the capitalistic world to really understand that. I tell a quick story about I had a director who was actively involved in mergers and acquisitions, and when we talked about this merger opportunity, and we talked about it being opportunity, and no staff will continue to grow in their roles, and he wasn't buying it because he said every time he went through a merger and acquisition, we'll cut staff. And we'll make more money, and who cares? Who cares how the people feel? Yeah. And so we had to work through that because it was completely different. This was about opportunity and growth for our staff and our members and the communities that we serve.
Yeah. Okay. Well, that's good. Thanks for that point, Gus. Out of interest, when you had your vote this summer, what were the results? Like, what percentage of members voted in favor of this?
Yeah, out of the members that voted, it was 70% in favor.
Oh wow! So it's quite high.
Yeah, high. Some would. Some would say low.
Really?
But when we did a little.
Guess I'm used to elections with minority governments.
You need 2/3.
You need 2/3.
Oh, you need 2/3.
Yeah. So from that standpoint, we weren't excessively above the bar.
You said you were 70.
70. Yeah.
Oh, so okay. So it was just squeaked by. Yeah. Not just, but yeah.
And one of my directors did a little bit of investigation, and he said, it's not uncommon for there to be about a 65 to 70% vote, just given all of the emotional attachment to. Right. So the people that are against
Bill was just talking about.
The people that are against it will come out because they've got a passion to not proceed. The people that are in favor of it, they'll go, oh, this is going to pass anyway. Don't worry about it. And so it was, for me, it was all about reaching out to my members and saying, are you in favor? And if you are, then let's make sure you cast your vote. And
are you going to politics next, Gus? Drive that vote.
Yeah, certainly the challenge. There's a silent majority, and getting the vote out is absolutely what it boils down to. Is making sure.
Fascinating.
Yes.
Yeah. One of you mentioned earlier about, maybe it was you, Gus, about you just gave that story of your board member who said, like, hey, we'll save money. Let's talk about that for a minute now. Tom Myers, who I love, great guy, worked with for years. He's now over at Summerland. He left because I imagine that there is going to be sort of redundancies in a sense in certain roles. Maybe not at the banker level, like at the customer service level, but higher up in management, whatnot. So how do you guys deal with that? I mean, is there challenges that you're facing there?
So just real quickly, I mean, we felt like we had a position for everybody, and when change happens in an organization, it's not uncommon for people to kind of step back and take a look at their personal situation and say, you know what, I've been thinking about making a change for a while. Maybe today's the right day. Yeah. when people leave during a merger, the merger kind of always gets blamed for it. But at the end of the day, it's really about personal choice. But I'm proud to say that at the end of the day, our organization, our staff, well looked after, and in a real positive frame of mind moving forward.
Yeah.
The other side of that is it's actually created vacancies for us. It's taken us to that next level where we can have the infrastructure to get more into data and analysis and more into the technology front, do more things on our own. So we actually had 30 to 40 vacancies created out of this.
Oh, wow.
So it was opportunities for the existing
Being a
staff.
bigger organization allows you to think bigger, be bigger.
And that's the reality of it. So it's interesting because obviously staff are concerned. And
Yeah.
but
Yeah, you kind of just assume that there's going to be layoffs, people getting pink slips and...
that's right. But then eventually it becomes the opportunity for them to, I can try that now. And there's an area in there and there's room for growth. And as Jeff said at the beginning, that feel of when you're growing, there's just opportunity.
Yeah.
It builds that great culture.
I think a real good example is, my executive assistant, obviously you only need one when you're moving into a new organization, but she wanted a new challenge, and so she's moved into a completely different role, and she's, kind of been revitalized in her career, her choice. And so, there's an example of, yes, redundancy, but opportunity.
Yeah. Okay, that's good. Was there anything, and this is I guess more of a question for Bill and Jeff, was there anything in looking at Aldergrove that you said, wow, there's something that they're really good at, that not that you're necessarily poor at, but that you just say, wow, we're going to really benefit from this particular aspect of having Aldergrove being part of our team?
One of the most, there were several things, and one of the most attractive is what I said earlier, that the fact that they are east of us and our members are moving eastward. So what better way to accommodate that?
So a geographic advantage was a big thing.
Absolutely, and instead of us having to open branches out towards there, we automatically have a network out to Abbotsford and Mission, and we can start looking beyond that at Chilliwack immediately, for example, and it would have been 10 years before we could have considered that without that. Yeah. So that's one, but obviously from the people, we've been such good collaborative partners over time that we had aligned our systems, we had been working together, so it just made sense from so many angles.
Right.
And when you talk about redundancy and you look at the map of the branches, and branches are important. GNF had about 18 branches that ended at Langley, and members are going east and have for many years asked us, when are you going to open in Abbotsford? When are you going to get out?
Oh, you were being asked, okay.
Even 10 years ago, we identified Abbotsford as an area that our members were moving to. But there are a lot of credit union competition in the valley.
Yeah.
And when you actually took the GNF branch network that ended in Langley and you then look at Aldergrove that starts in Langley and goes east, there's no redundancy of branches at all. It's almost like there was a grand plan, and now it creates opportunity for us, and we will be opening some new branches that individually we wouldn't have been able to do, and rather rapidly we'll be able to add some branches to our network in the valley. And again, that creates more jobs.
Okay, that's good. Yeah.
So we're looking for people.
Okay. You're looking at me.
There's opportunities.
I'm looking for people too. I think we're all in the same boat there. One of my questions is there a cookie cutter blueprint to mergers? You've had what seems like, it's only been a few months so far, but a successful merger with Aldergrove. You mentioned these ones with Mount Lehman. Where's Mount Lehman, by the way?
In Mount Lehman.
I'm sorry.
Abbotsford.
Literally.
I apologize to listeners if you live in Mount Lehman. I'm going to come visit. I
have a Mount Lehman Center branch, and that's in the west part of Abbotsford, and the Mount Lehman Credit Union is just about 5K out into the rural.
Okay.
area.
Is it a single branch? Okay, gotcha. And then the Vancouver Police Credit Union, I'm assuming that's a single branch location as well?
Two. The one at Gravely in the police station and one on Victoria.
Okay.
But they serve police, they serve correction officers, and also people that work at the border.
Gotcha. Okay. So is there a cookie cutter model here that you can apply? Are all mergers generally the same in that sense, or are they quite different?
I wish they were. The only cookie cutter part of it might be the process you have to go through. But it's all about people again. And first you have to really figure out if there's a match. We've had conversations in the past, and it doesn't take too long to have a conversation and figure if there's a connection between the two organizations or not. And we've walked away from previous conversations.
You have, okay.
And where there is a fit, and particularly where the trust has been established over years, like we had with Gus and Aldergrove Credit Union, that part is much easier. You're not worrying what's under a stone, because you have that trust. But when you actually get into it, recognizing the impact on the employees and the members, understanding them, that's actually probably the hardest part of the journey, and there's no cookie cutter to that.
Right.
When we started with Aldergrove, we had a steering committee that includes some of our directors, and one of the Aldergrove directors, one of the first things he asked management is, how do we know where we should be together? Like, maybe we should do a cultural assessment. And we actually hired a third party that came in, talked to our employees, and they came back and said, well, we're actually quite shocked at the DNA. Your employees, your organizations are very similar. You do have some differences, but they may be more complementary than conflicting. Okay. So a fair bit of effort went into that process.
But let's talk about this consolidation. Now, Bill, you mentioned earlier a stat on the number of credit unions in the 1960s in BC was...
There was over 300 at that time, yes.
So my observation, knowing this industry quite well, there's I see big shifts happening in the credit union space. One is this continued consolidation of credit unions. And Jeff, you spoke earlier to things like competing with fintech, regulatory burdens, that kind of thing. So maybe we can talk about, like, why is this happening? Is it really good for our society? Is it good? And then the second thing is this shift from provincially regulated credit unions to federal. And I'd like to get your comments on yourselves. Are you planning to, so maybe we'll start with the first part, which is opening up to, like, why are we seeing a continued consolidation? Where do you think it ends? Do we get to a point where we're down to 50 credit unions in BC? And is this really good for Canadians, for consumers, for people in the bank, retail customers in the banking world?
It's a natural course of what happens in cooperatives, I think, over time. There was a need, there was a reason it built up to 300. Society, that's the only time you really know what the purpose of an organization is. People get together and they start a new group in there. And at that time, you either had so many reasons, occupational bond, ethnic bond, regional, geographic ties, whatever reason, there was a need for those credit unions to form.
Right.
As they expand, as they grow, sometimes that need changes and it disappears. Sometimes other financial institutions start to serve that need and they can fulfill it more easily than some of the other ones. So at some point, it makes sense to start working together. The cooperative system, by its nature, is trying to, behind the scenes, have a central organization or work on things collaboratively as much as it possibly can. So as you gain success in those collaborative ties, sometimes a merger becomes the obvious next choice because we've got so much in common in the back office. Why don't we just combine the balance sheets? That's where the emotion comes in that we talked about earlier in terms of making sure that the members understand why it's in their best interest. They have emotion. They love the employee they deal with. They love having coming into the routine that they've got in there.
Right.
And at the end of the day, it becomes about the real testament at the end of the day is when they come in there, I wanted to hate it, but I don't. It's created this opportunity. You've got a call center now. You've got something new in there that we didn't have before. So it creates that. So I think it's a natural extension. We're down to 40 now in BC.
Okay, 40 credit unions.
40 credit unions out of that 300. So now it's not been a linear path down. It goes through phases where you go very quickly and a bunch change, and then all of a sudden they don't, and then there's some discussions and whether.
And where are we at here in 2021? Has it been last couple of years have been?
It's been at 40 for quite almost a decade now. So it's an interesting curve where and BC's unique there. In other provinces, the consolidation trend has continued. So BC got to this 40 probably ahead of the rest of the country, and now it's the others have caught up, and now it's time to continue and see where those opportunities take us. As long as there's a good reason for the credit union to exist, as long as its members are still growing, as long as there's a value proposition that it's offering, it can expand, and that's not dependent on size. If you're in a community where there's a need, or if you're serving a segment where there's a need, then you can be around for a very long time, and there's a reason for you.
But without having to grow your member base is what you're saying.
Correct.
Yeah.
Or
like, for example, if I throw a name out there, like say like a Sharon's credit union that kind of services the lower mainland Korean community.
Absolutely.
So even if that community is only growing by a certain, that would be a niche.
As long as that community continues to support the credit union and see the needs, and there are several examples like that, those can be around for a long time, or even in geographic ones, in Salmon Arm Credit Union or Grand Forks Credit Union, they have some pretty strong.
Right. Okay, so then let me pick one here that you guys are working on, which is Vancouver Police Department. I mean, it would seem to me that they've got a need within their department, and the Vancouver Police Department just continues to grow. You mentioned also corrections. Yeah. So how come they decide they want to do this? What was the desire there?
I think there's also been a bit of a perfect storm over the last 18 to 24 months with economically our interest rates have hit an all-time low, and financial margin has always played a big part in in the majority of our income. Certainly the COVID has impacted how people do business, so there be more people using the digital avenues, and finding talent. It's it's tough out there to fill holes in your organization. So all those things, when you step back as a smaller organization and you go, strategically we need to take a look at other options so that we can be around for the grandkids and the great grandkids of our members.
Let's talk about some of the other changes that we're seeing in banking. And you mentioned earlier, Jeff, fintech. Would this be another reason why we're seeing consolidation? Because I imagine that being able to do banking remotely is obviously for the consumer, it's a good thing. Especially what we've experienced with COVID for last year, people have not been able to, or not felt comfortable about coming out of their homes. But I imagine also poses a challenge because you're trying to compete against the other credit unions across the country. Some of them have gone national. Do you want to comment on the challenges you face there or the opportunities you face there?
Yeah, part of our question is bricks and mortar and digital, and even for Vancouver Police Credit Union, they do have 2 physical locations, but most of their members are south of the river and out to the valley. So the branch does play a role. People want to know where their money is. That's why we have branches. And then the reality is 95% of their transactions are digital, and so we need to find a way to allow people to do banking where and when they want it. And frankly, some of those new tools can actually improve the financial lives of people. It can tell you may have a bill payment in a week that's going to overdraw you. And instead of paying service charges, you actually have the intelligence in these tools to help you with your money management. It may tell you that as a 23-year-old, you're going to the bar more than the average person. So some of these tools actually can really improve the financial lives of people. Where the challenge is decades past, you would put in some technology and it's going to be there forever. Now you're putting in technology at times that might be there for a year or 2 or 3 years.
That's amazing, isn't it?
And it's more plug and play. And so you're having to invest an awful lot more and have the capabilities on your team to be adaptive for your members, right, because it is changing all the time. And there are some great products being created by fintechs. Vancouver's a hotbed of fintechs, looking at financial tools for people, but they don't have a membership or client base to start with. We actually have that, and we have the trust of our members. And frankly, at times, fintechs are coming to organizations like banks and credit unions to say, okay, we have a great product. Could we maybe partner with you because you have a client base?
Right. I think that's the exciting change that's happened over the past decade or so. At first, it was a threat. Fintechs are coming in. They're going to take everybody out of business. And then you realize that that's the opportunity. They've identified a need. They've identified something they can cherry pick. So it is a threat to the credit union from a revenue source perspective, but it's also the opportunity because they still need to understand that trust, the relationship with the member. So how do you collaborate? How do you work with the fintechs?
Right,
and that's the exciting opportunity.
Yeah, those are some good points. So obviously we identified the fintech space as being an opportunity, but also a bit of a threat. So there's a need for consolidation as the capital costs for implementing in fintech are pretty high. The other challenge you mentioned earlier, I think Jeff, you mentioned, is on the regulatory side. And I think that to these single branch locations like a Mount Lehman or a CCEC, I don't know how they can possibly maintain the kind of proper compliance they need to maintain by the BC regulator, which is mirroring off of the federal regulator when you're such a small one branch operation. Is that a fair comment?
That's a very fair comment. It becomes more and more challenging. When you're in a smaller credit union, you're a generalist. You wear several hats and you've got so many things that you have to do during the day. And if a lot of that is ticking boxes and meeting regulatory requirements, which are critical, they're absolutely essential to make sure that there's a certain standard, but it's not a one-size-fits-all model. And BCFSA has come in and they've actually changed the model from FICOM. They're trying to modernize their procedures and they're doing a pretty good job, but it's a slow transition. And there is just much more that from physical reporting, from all of these other things, that you just need additional staff. And that's another cost that the smaller credit unions have to absorb.
And needless to say, the backdrop of all this is cybersecurity and the threats that we have, to us as an organization, to our members. there's people praying all the time, and as people are using more and more digital tools, it's harder for some of our population and members to know how to use them, but more particularly safely.
Yeah.
And so we need to build robust systems to protect our members and the credit union.
Yeah. Do you get support from, you mentioned, Bill, BCFSA, which for the listeners that aren't familiar, this is the government run, it's now a Crown Corporation, because it's changed from the old FICOM, thank you. But it's the regulatory body that oversees the banking system for credit unions in BC. You also have Central One, which is almost like a central bank for the BC and Ontario credit union system. And then you also have the members, the other credit unions, because it's a lot more collaborative, as I can observe from the outside, versus the banks who are profit-driven, kind of competing against each other. So do you get support from those three? So other credit unions, BCFSA, and Central One in things around regulatory support, fintech ideas, or ways in which you can provide better services or more secure service to the members?
With our regulator, of course, their number one job is to protect the depositors, but they do work collaboratively with us to identify areas we need to focus on. We're under constant monitoring, as everyone that's regulated by them, but they are there. They're not working against us. You know, they do want to support credit unions and know that we play an important role in the economy. Central One's the biggest vendor supplier we have. You know, they particularly where we don't compete, we need to do things together. And even some of the banks do that well now. Figured out if it's not something that is that important on the front end of competing, then you can do that collaboratively. And Central One plays
like securitizing mortgages and that type of thing.
Yeah, and our clearing and treasury operations.
FX,
They do an awful lot in that area.
Yeah. Okay. The other thing that before we talk about why credit unions are so much better than banks, the other thing I want to talk about, you guys all laughing. The other thing I want to talk about is this pivot from provincially regulated credit unions to federally regulated. So it was back, I think, under Stephen Harper's administration where they sort of laid the groundwork to allow for a national registration of a credit union. A credit union can basically become federally regulated. So for the listeners to understand, this means going from being regulated by a local BCFSA to FICON, the Financial Institutions Commission, and so now they're basically regulated like the banks are. So the first one we saw was Uni Credit Union out in New Brunswick. And knowing those people really well out there, their main objective was because they were so big as a decentralized credit union system when they merged, they needed a bigger regulator. So that was and they've been very clear. They're not motivated in trying to go national. And I forget the fellow's name, but the former CEO who launched Coast Capital Savings. What was
Lloyd Craig.
Lloyd Craig. And as I understood, I never met Lloyd, but I understood.
And then Tracy Reddy's actually.
Pardon me?
And then Tracy Reddy's followed up on that path.
Yes, that's right. And their goal was to see Coast Capital Savings become Canada's first national credit union.
Coast to coast.
Coast to coast, yeah, good name. We've seen First West Credit Union. They're in the merger space. Actually, one of the things we'll also talk about actually is the branding, but we'll get back to that in a second. But First West has also made it clear that they want to go national. Innovation Credit Union wants to go national in Saskatchewan. I don't know where Meridian sits on this. I think they're looking to do this. So it seems like there's a lot of credit unions in various provinces across Canada looking to go national. Can you provide some color on this? And where does GNF stand on that today?
Sure. Meridian and Alterna actually have bank subsidiaries, so does Van City. So that's a different way from going federal and getting that federal access, but going it through opening a bank subsidiary as well. So they're all trying to accomplish similar objectives, but for various reasons where they are in those organizations. Van City was one of the first ones to have a subsidiary bank, and Citizens Bank originally, and it's expanded now. So there's many reasons for doing that. A lot of that is sometimes the regulatory environment is inconsistent. Credit unions are provincially regulated, so if you try to do business outside in multi-provinces, it can be a barrier to that. The inconsistencies, which is the deposit insurance levels as well. So you have different levels of deposit insurance in different provinces. BC is an unlimited. If you look at the actual trend, they're preparing for the future in various capacities, and if you notice, it's a balancing act between physical branches and digital, between trying to understand what the consumer needs now and what they're willing to do in these locations and whatever else. So managing the timing, and a lot of it boils down to how long. So it's a long-term play. They first started talking about that legislation in the 1990s, and now it's expanded, and it takes about 20 years to get there. So if your growth plans are multi-provincial, I think that comes into play in one capacity. I don't think a branching strategy makes sense. You're not going to be able to afford to open branches, but your merger opportunities, it opens up a different playing field across the country. For GNF, we, as we said, are pretty much a Lower Mainland credit union. We're out, Chilliwack's our next plan. We think there's opportunities within here, so we don't see the need to move there. Okay. That's not to say down the road it doesn't make sense for us at some point, and it's nice to have legislation in play. And we're always in favor of leveling the playing field of the regulatory environment, because it's confusing to people when you have to operate in multiple jurisdictions.
Sure. Okay, that's really helpful. Any other comments, Jeff or Gus, on your observation of why we're seeing credit unions beyond what Bill's just said?
No, you have to know your members. It ultimately comes down to that. Who are your members? Who are you serving? And what are their needs? And we have studied it and continue to watch it. But for our credit union, our members, we felt that they were well served where we're serving them now. So it didn't mean leaving BC yet.
Yeah, and it's not an easy journey. I mean, I can think of First West because they're right in my backyard, and I actually used to work for Envision, First Heritage, and they've been working on it for a lot of years, and it's been a lot of work and cost, and it's coming to the point of the member vote in early November, and we wish them all the best.
Yeah, it's a huge undertaking. Before we switch to why banks are not as good as credit unions, the one other thing I want to ask you about when it comes to mergers, there's two merger models, right? So there's the one that's like, I don't want to be a good example where it's all one brand. I call it the Coca-Cola model, right? Where no matter what branch you go into, or whatever vending machine you see, when you see that Coca-Cola logo, you know it. Can you give me a good example of a credit union that's done this in mergers under their branding in Canada?
To go under one Service in Alberta.
Yeah, bingo. That's a good one, Jeff. Thank you. So Service credit union. So any acquisition or merger they do, that smaller credit union gets wrapped up under the Service brand. They rebrand all the branches, everything. By contrast, you have First West. And a lot of people don't know First West is the third largest credit union in BC, second largest under provincial jurisdiction. And they have Envision Credit Union, right? Island Savings, Valley First, and they have that one little brand, Enderby, thank you. Not too bad, hey? So they've got a model where they've decided to keep that local presence. What is GNF doing with that and Aldergrove, and how do you make that decision between a centralized sort of single brand across all those jurisdictions, or going the First West route of having like a decentralized sort of branding?
I think it starts a little bit with the passion we talked about and people owning their credit union and the name. When you're in different communities like First West, probably made sense to have one brand. For us, kind of serving the Lower Mainland, but that definitely there's different parts to the market of the Lower Mainland. But the reality is people travel within our community of the Lower Mainland. Yeah. And if we had different brands that were more community-based, serving, if a member were to drive by a GNF and then an Aldergrove and not know it was the same credit union, they probably wouldn't know they could use it. Yeah,
that'd be kind of an unfortunate situation. You almost want them to,
And one of the things that we sometimes battle with is credit union members and the community don't realize how big the credit union network is, that we have the largest ATM service fee free network in Canada. People amazing. Would assume it's the banks.
That's
right?
a good plug. That's a good segue.
Well, people don't realize that. Yeah. So for us, at least in the Lower Mainland, understanding that, but we actually are going through a brand journey right now. We've hired a third party that's helping us get to the core of who we are, what our values are, and the brand discussion is part of that. And probably for another day. But one of the bigger differences is Aldergrove has used the word credit union. GNF moved from that about 20 years ago to financial group to kind of convey to people that we do more than just credit. In our province, research has shown about a third of British Columbians deal with credit unions, a third of British Columbians love credit unions, a third would never deal with a credit union, and a third doesn't know. And so we're fighting for that third in the middle.
Yeah.
So are you a credit union financial group? As an industry, it's a question that's asked quite a bit.
Okay.
And that's why you have maybe just Van City. You hear the one brand, right?
Yeah, that's
maybe
right.
like Share. You hear one name instead of what they are.
Yeah. So jury's still out on where the branding will go for yourselves, but that's a good example. And you're right. I mean, if you look at Island Savings, having grown up on Vancouver Island myself, and Islanders tend to be really passionate about the fact that they're from the island. I think for First West case, it was probably a smart idea to keep that Island Savings. I think if it got rebranded under Envision, it probably wouldn't have been as well accepted.
I think the jury's still out. As you look at future potential opportunities, you have to continue to evaluate that situation and look at the circumstances. The important thing is to recognize the heritage of where you came from and make sure that you are honoring the local feel. So as you said, Island Savings, there's extreme value in that brand.
Yeah.
People from the island would really appreciate being from the island.
Yeah.
So as you look in there, how do you continue to make sure that you're honoring or recognizing the heritage?
Yeah, good. Okay, guys, now to the big one. Why are credit unions better than banks? Who wants to start with that one?
Well, I wasn't born into credit unions. I learned to love them about 30 years ago when I joined the credit union. And I think what is really unique is the sense of ownership, that you actually own the credit union. Certainly there are customers of banks that also own the shares, but that sense of ownership really does play out. And a really great example was during the financial crisis about 10 years ago, when people were really struggling. One of the best performing credit card portfolios in North America was Canadian credit unions.
Sure was.
Because the members own their credit union and they don't want to let their credit union down. So that sense of ownership is certainly different. You have a say, you have a vote in our election process and our governance, and you have a share. But as we said before, you have one share, you have one vote. You can't gain control of it. So that certainly is where it starts.
Yeah, that's a good point, Jeff.
One of the things for me is, it's around profit, and we need to make a profit as a credit union in order to continue to grow and add the resources and tools that our members need. But we're not driven by the ultimate profit and to pay the shareholder the maximum amount, and when we give back to our communities. So in a big way, not only with money, but through volunteer of staff and at various levels. That the staff inside the branches are yes, they are selling our products and promoting our products, but in the best interest of our members as opposed to shareholders.
I think it's a really good point, Gus. I'm sure, Bill, you've got something to say as well, but I think just a segue on that. My observation has been that the nice thing about credit unions is they aren't completely profit driven. It's not about the almighty dollar, and they're not having to focus on increasing dividends and paying out shareholders. And so you get this nice mix of, yes, you have to generate a profit for those purposes you demonstrate, as well as your depositors want to see you have a profit. And no one wants to deposit with a banking institution that can't turn a profit. But it does, my observation has been that, and I don't know if you have any stats on this, that credit unions seem to contribute a lot to the community, the local communities they operate in. More so, I think, than the banks do. The banks are really good at promoting their community involvement, but a lot of that's just, in my mind, is just advertising and promotion. Do you have any thoughts or comments on that?
I think you hit the nail on the head there, is that you don't have that separation between shareholders and members. They're one and the same. The customer is the shareholder. So when you have that, you're not on this treadmill to continually every quarter have to please a shareholder group, which could be at the expense of the membership at the end of the day. So that's where it starts at the core. Yeah. And then you do want to remain financially sound, but it's not for profit maximization purposes at that stage. It is so you can do exactly what you just said, give back to the community, train your employees, provide more convenience, invest in your technology, do things that are good across the board. So on the community side in particular, It is a cause for GNF and all credit unions at the end of the day is to support where they're coming from and that local feel. We have great partnerships with every municipality that we have branches within. And that's we support their events in those communities, both in a financial standpoint, but more importantly from a volunteer standpoint. So they are one and the same as our staff members in each of the locations where their branches are trying to make the schools, the community interests, whatever the events are in those communities, the hospital organizations, that much better. Okay. So as Jeff said, with the credit card portfolio, members feel loyalty to their credit union. They want their credit union to succeed. There's peer pressure from the members along there, especially when you're in those smaller organizations, which continues to exist. They are conservative by nature. They are there for their members. They're not attempting to maximize profit, so you don't take the bigger risks at the end of the day. You're making sure you've got prudent underwriting, and there are so many layers of protection in there behind it that it's hard to imagine a situation. You start with basic lending underwriting skills and loan to values and TDS, GDS ratios. Then you look at the monitoring behind it, the reporting to the regulator, the internal audit functions you have in there, the capital, especially over the last 10 years, it's been building up capital for that rainy day. And then you do stress testing on that capital. And you try to imagine the enormity of the situation that it would take where property values would have to go down more than 50% across the board for an extended period of time. Unemployment would have to be some ridiculous number, and you still are at a stage where you're above the regulatory minimum capital in those stress environments.
Right.
So, and
Jeff, now I know why we brought Bill. You said this. He's the technical guy. That's a great answer. And actually, I think it's a nice, because you said earlier, Jeff, the other part is members don't want to let their other members and their banking institution down.
Or the people when they visit the branch and
That's
they know.
right.
Yeah, I think it's about intimacy too. I mean, we maybe my personal opinion is we know our members a little bit better than maybe the chartered banks do, and we know the communities that we operate in intimately. Right. Yeah.
I often say that credit unions are what banks used to be 150 years ago.
Well, it's a good plug. I mean, it's timely. We do compete with other credit unions for sure, but there's a codependence. We do a lot in the background together, and Ipsos Reid just did their annual survey of financial institutions, and for the 17th year in a row, credit unions came out number one in service for people.
Wow.
We're part of that, but it's also an industry that is maybe more about people, and as we say, the people we serve own us.
Right. That's good. That's good summary. Let me ask you this question. Do you feel that the Bank Act or the way in which the banking environment in Canada is structured gives an unfair advantage to the big six banks over credit unions, or do you even care?
I think there's room for us to compete. I mean, the banks are good at some things for sure, but we offer many of the same products. I think at times we can compete more. I mean, it does depend on a credit union's own structure and needs. I know, when we're looking to raise deposits, the first thing Bill often says is, "I'd rather give a member a great rate than someone that's not a member."
Right.
That's why we're there.
Gus?
Yeah, I think with what we have, I think we have lots of runway to continue to be successful and continue to grow we celebrate when we take business away from the banks. That's why that's what we're here for, because I've always told.
But do they feel they have an unfair advantage at all?
I don't think so. I mean, I think they've got advantages in certain areas, and then we've got advantages in certain areas. And one of the things I've told my teams over the years is our biggest challenge is to get people through our doors, because once we get people through our doors and they realize the difference in how they're treated, then they will stay with us for a long time.
Okay.
From an actual member perspective, I don't think so. From an operating and from an odds, I think they can hedge their bets a little bit. Mm-hmm. They can afford to invest in 200 fintechs in the hope that they might identify the couple that might be the ones that really take off in there.
Right.
But I think that just forces credit unions to be a little more creative, a little more intimate, and a little bit more finding those opportunities in a better way, where you can't take the easy way out and just say, okay, one of them is going to succeed. You've got to find those other opportunities. But what it does do is enhance innovation and creativity. And if you go back historically, a lot of especially from a member perspective, the original interest-bearing accounts, the original mortgages for specific reasons originated with credit unions.
Yeah. I'd like to ask you about CEBA. So there's a number of initiatives that came out, but one in particular that I know impacted the banking system, credit unions and banks alike. Canada Emergency Business Account, came out early last year. And it's been a bit of a windfall, in my view, for the banking sector, because a lot of the people who applied for these loans, a lot of these business owners, including myself for full disclosure, applied for it and never really needed the money. But it was a free handout by the federal government, because it was originally $40,000, of which you only had to pay back 30, zero interest. The money was all being put up by the federal government. And as I understand it, the banking institutions get 40 basis points administration fee annually for that, administering this. And then they came out an extra $20,000. I'm so used to dealing millions and billions. Another $20,000 on top, of which you only had to pay out half of that. So you're talking about $60,000, of which you only have to pay back $40,000, and $60,000 of capital interest free. But from talking to a lot of the bankers that I talk with, it sounded like most of that money sat in the bank accounts, put in deposits, which meant then those banks and credit unions could turn around and lend it out in the form of loans. It seemed to me, from when I observed it, the credit unions were kind of late getting access to this, which gave the banks, and that's why I was going to my earlier question of an unfair advantage. I feel like this is a good example where the banks really did have a bit of an unfair advantage to capture a huge amount of this market. Can you comment on that for me, please?
In the middle of a crisis, speed is everything, and the government is trying to do its best to come up with some program, but they're talking at a high level and the details are not worked out in there at all. So behind the scenes, everyone's trying to come together with these things. It was structured so that the banks can have access to that. Credit unions, they don't want to deal with 200 credit unions across the country to figure this out. So larger credit unions also had an advantage because they're big enough to be at the table for some of these conversations. Otherwise, you have the National Credit Union Organization, the Credit Union Canadian Credit Union Association, and then you've got Central One doing the mechanics of it behind the scenes for the BC and Ontario credit unions. So it took a little extra time for those, especially for those who aren't large enough to have the seat at the table. That's another reason for the merger. We're not growing for growth's sake. We were actually at GNF the smallest credit union that was able to get that access sooner and in the country. So we actually just crossed that threshold, and we were fortunate in that regard. Okay. But it definitely takes a little more effort and a little more time in those circumstances.
Okay, that's great. Thanks, Bill. Gus, Jeff, any further comments you want to add to that, or?
That's the importance of, and the way we're structured the way we are, being provincially regulated, and most of the credit unions in Canada being provincial. When there's a federal issue, we need to find a way to get a common voice. Same thing happens with taxation, and CCUA takes a role in that for us. The Canadian Credit Union Association. It's kind of like our trade association. Yeah, and they play a role in public relations and dealing with the government, and so that does show the power when credit unions come together and work on something, and then we can be heard.
Okay. Yeah, Aldergrove was a little bit behind because we were a little bit smaller than GNF, but the irony of it was, the relationship building that happened as a result of our commercial account managers reaching out to our individual business clients and helping them through the process really built a loyalty throughout this whole process.
Oh, great. That's excellent. Good. Well, we're coming to the end here. I do want us to give you an opportunity to talk a bit more about this merger, sort of a little plug here. So when it comes to the merged entity of Aldergrove and Gulf and Fraser, you've got how many branches now? How many members? What are we talking? What are the stats here?
So we'll have 52,000 members operating 25 branches. We have a couple on the drawing board.
Yeah.
One will open in Guildford later this year. Where we're looking at other markets, and so it creates opportunities.
How many employees, Jeff, roughly?
We have about 330 employees, and we're looking for those other 40 right now.
Yeah. And I have to say, it's pretty impressive that you two fellas, and I can now see how you work, you're like yin and yang, it's very, that you've managed to be co-CEOs for 10 years and build and grow this institution as both a partner with you guys on the institutional deposit side, but also as a member at GNF. I've really been happy to work with you guys. It's been a great experience. And it's very uncommon to see co-CEOs last very long. You guys have got almost 10 years under your marriage together here. This is quite...
10 and a half, actually. We're almost ready to celebrate. And it definitely was unique. And when our board was looking for a new leader, it was something that we proposed. But we work in a cooperative industry, and if it's going to work anywhere, it should work with a credit union.
We've been able to have a lot of fun with it over that time and there's the obvious benefits to it of being able to be in two places at once and do those, but you get the jokes. Are you one Monday, Wednesday, Friday, the other one Tuesday, Thursdays, or whatever it is. But you just, it's been a pleasure because we just build on each other's skill sets, and it's been a constant learning curve.
Yeah, great. Gus, it sounds like you're fitting in quite well too with these guys. You've been known them for a long time.
Yeah, and that's really the secret sauce to this whole merger is the relationship that we've enjoyed for 10 years and the trust that's been built up over that time. And you know, they've welcomed me with open arms to their table, and you know, I'm proud of what our organization was able to produce in the past, but so looking forward to what we can do together with our branch network and the communities that we will continue to give back to.
Yeah, great. Well, Bill, Gus, and Jeff, thank you three gentlemen for coming on to Coastal Front today. It's been a great conversation, and I wish you the best with not only this merger, future ones, and growing success for GNF Financial Group. So thanks for being on Coastal Front today.
Thank you.